Hi, in this video demonstration, I'm going to show to you a simple trick to have in your arsenal in the event of stagnant markets that are poised to move, pending economic news, oil inventories, home sales, on jobless claims, whatever news, political news, whatever news may be holding the market hostage. A great tool, a great trick, a great tactic to have in your arsenal of weapons to take money trading binary options is the range option. Now, on this in this chart, you can see I have a range from the U.S. markets. Right, last trading day of the year, the U.S. markets were held hostage with regard to the fiscal cliff. We have been spiraling down. If you look at a daily chart, you can see that the markets were in a continuous sell-off. On the 20th, we rebounded 24th, 26th, 27th, 28th, and then here we are on the 30th, 31st, with regard to the fiscal cliff fears. And you can see that was resolved to the upside in a very big move. The way you can take advantage of that, real simply, is if you have a range and you know, like in this scenario, it was clearly evident if we did not get a fiscal cliff deal out of the White House, the market would have sold off and it would have been a very big downward spiral. And we were poised to have a very dramatic move to the upside as soon as a deal was announced. The best scenario in this range, you have a tight range. In this range is to pick an outside range product. And very simply what this means is, I'll show you, OptiMarkets offers a range product. You log in, you click on their range tab, and what that means is they'll have a strike line and then a price above and a price below. And what that simply means is, so let's just say you took a product that calculated a breakout of that range. What this means is, I'm going to use $100 as an example. If you post a binary option, an outside range option, what you're saying is you pick a strike, and by the way, 1700 is a strike that's normally available on the OptiMarkets platform. This was for December 31st, so this deal was either happening or it wasn't. So the market was poised to go in either direction. This was a day for easy pickings. And real simply, if you're saying the market is, I don't know if they're going to make a deal, I don't know if they're not going to make a deal, but something's going to happen because in a few hours, the stroke of midnight, and something needs to be resolved one way or the other. So you take an outside range option, which simply means that if the price of the underlying asset trades outside that range to the above or to the below, you're getting paid. Don't know which way it's going, but I do know that it's going to break out of this range. There also is another variation of that, which is called a touch and a one-touch option. And in the touch option, very similar, there's a range to the option, and there is, if you touch it to the upside or you touch it to the downside, you win your option. And these products are available. Here's the one-touch tab, here's the touch tab. But focusing on identifying the pattern, if you have a range like this where we're locked and loaded and ready to go one way or the other, just news has to decide which way. Go with the range product or the touch product. It's a layup for taking advantage of situations like this. Now, on a short-term scalp play, which is another very powerful tool to use when trading things of this nature, we have here, let's just say we took this trade, a range trade, and we took it for 1700. Clearly we're making money, but you know what, we're making money, we're happy. the move was resolved to the upside. President Obama came out and said, we made a deal. Fiscal cliff fears are no more an issue. Now we're trending to the upside. Well, going on powerful moves, every bar that you're having a breakout is a great way to play a scalp trade. So the move is to the upside. You see the RSI to the upside. You see we clearly broke out of that range, and more importantly, we have moved beyond the downward trend, which was fairly significant in the preceding weeks and days, and we're clearly moving to the upside. So this is a 60-minute bar. I'm gonna go to a 15-minute bar. And this is a 15-minute look. Now you can clearly see that this range was actually could have been a little bit tighter, but be it as it may, that's where we are. Now you could have played every breakout move to the upside, because now we are rallying into the end of the year without question. So a great scalp strategy would be take an expiring contract every time we reverse the downtrend to the upside. So on this move here, our first move up, we break out of this range. We have 2 down bars. On this very next bar, at 1397, we break out of the of this range. Take an hourly expiration. So if you would have took the 10 o'clock strike, you would have had money right here, 15 minutes. Then we sit back and we wait. Now we wait and we wait, and we see the next level of congestion. This is the next bar we break out of at 1404. That bar was at 12:30 Eastern time. You take a 1 o'clock strike price on that bar, and there it is. We would have made money on that one. Another trade. We wait for the congestion to subside. We get another breakout bar at 3 p.m. Eastern. This bar we take a 1600 or 4 p.m. Eastern strike, and that one closed out in the money. And you could have even did it on the 1700 bar. Point being, when you identify a level on a chart that has a lot of congestion and it's coiled and poised for a move, either upside or downside, you go right to the range or the touch or the one touch option, and as soon as that defining moment is made where we are moving up or we're moving down, you attack it with a vengeance to one side, or to whichever side it's biased, and every time you break out of a level, you latch on to the nearest expiration and trade that for a quick move. Now again, using the rule of thumb that I explained in other tutorials, risk management is key, asset allocation is key. Don't bet your entire account on one breakout move. But here's an example. On January 31st, you could have went in the new year with an expansion move on a range trade, and then have taken every hour on the hour or every other hour on the hour. You could have taken another 2 to 3 trades for a total of 5 on the day that you knew one way it was going to be resolved, upside or downside. And if this had played out to the downside, we would have did the exact same thing. We would have played the downside momentum on every break lower for the nearest strike price. And that concludes another very easy but very powerful way that you can use binary options on very simplistic front-end platforms with products like range and touch and one-touch products to take advantage of telegraphed moves in the marketplace surrounding big news headline events.